Hello, everyone. Welcome to this weekly update. We're going to look at the trades. We're going to look at how to progress and what the trade has given us. Now, this is 1 4-hour time frame on the DXY, and we are seeing that the price had broken to the upside to break this structure. This is the first microstructure that the price broke, and it broke this structure to the upside. So what do we have? So I will tell you that we are in a 50-50 situation, a 50-50 situation. When you are trading Forex or you are doing analysis on any digital economy, you must have an open mind. What we want to do, we want to trade in the line of the most highest probability based on analysis. So we're going to dissect and see what price is likely going to do based on the structure. Of course, we know fundamentals will play their own role. The geopoliticals will play their own, role in this game. But again, your understanding of the structure, perfect understanding of the structure, will always give you an edge. So that is what we want to do. So what exactly is going on, and how are we going to deal with trade? Now, it is good to note that it is better for you to plan to join trades at the extreme. You don't continue with the ongoing trade at the extreme. You plan to join trades at the extreme after you had seen sign of a price action, either in the opposite direction. So you try to join in the extreme in case price is going to go against you. So you are not taken out of the equation with a large loss. If you join trade in the middle and you don't know what trade is doing, then you are in for a kill. And that is why no matter what price do, no matter what momentum you are seeing, no matter what the rush and the candles you are seeing, you have to wait. You have to simmer down. Your opportunity will always come. Somebody would have said, oh, if I had known, oh, this thing is going to buy, he's going to buy. He's got here, he's going to buy. Now I'm not in this trade. The price had gone. And what if the price had gone? You don't have to kill yourself. You have plenty of opportunities. Pride has given you a lead of what most likely is going to do, and you wait for it. That is most definite way of you not losing, by saying, okay, we had suspected that something is going to happen, but this is what the price is giving us. Now, I'm going to present to you a 3 scenario of what price can do at this level, what to expect, the 3 scenarios, and we're going to look at it together. So it is a teaching day, and as well as try to give us a forecast as well. So let's go with this. Let's go into the weekly time frame. Or rather into, weekly time frame. I clicked on the wrong thing actually. So let's go into a weekly time frame. Going into a weekly time frame, this is what price is giving us. So we can see that we had expected that this will be, of course, the fourth wave, and this is the second wave. Looking at this point, wave 1 of the last, we had said this is like a wave A, B, and a C. So this is wave 1, wave 2, wave 3, and wave 4, and these 5. We were expecting one more correction, because we were expecting more an impulse to the downside to break the low, and before we see this to the upside. But now we are seeing this to the upside. What are the likely scenarios? I'm going to zoom in for you to see what I'm about to say. Remember, there was a time I was telling us that we may have a scenario whereby we're going to see a double three, I mean 7 swing. You remember I told you that we might likely see a 7 swing of a W, an X, and a Y. So that's the first scenario. Is that about playing out? In that scenario, we have said that an A to the upside, A, B, C of a B, and a C. That's the first triad. So A, B, C. And we say this may be enough to correct for the price to go more than bearish, for the dollar to fall the more. No matter what the price does to go to the upside, I don't want to care. I don't want to bloody care how far this price is going to go to the upside. It's still coming down. Maybe not in the next 1 or 2 months, but it's still coming down. That you know, based on knowledge. So I don't want to care. So this may just be a simple correction, and this may just be, oh, we are coming to the downside. We are holding that view. Now, if we are not turning to the downside immediately, and we're going to see a W here, and this triad A, B, C, for us to turn to the upside to give us a wide leg. So in that case, how do we now count? We count 1, which is A, 1 and 2, 1, 2, 3, ABC of B, and a C. And we'll see this one to be what? An X. And this will be again A and a B and a C of a Y. So that will be a W. This will be an X, and this will be a Y. So, but if that is what we are going to see to complete Y, then this is going to be a very sharp move to the upside, an impulse. It's going to be an impulse all the way to the upside, and we'll be seeing all the internal architecture of that. So that is a scenario. The second scenario now is that we are seeing a correction of waves from here to here, because it's a 5 clear wave, A 1, 2, 3, 4, 5, and probably want to see a correction of an ABC to break down. That is the second scenario. The third scenario is that maybe we have not finished this wave. That's the third scenario. Maybe we have not finished this wave to the downside. Maybe this is still part of what? Part of wave 4. This 4 here, A, B, C. Maybe it's still part of wave 4. That is the third scenario. Now we are going to look at what will knock this scenario off. Because the immediate scenario, when you are talking of, okay, this is an A, B, C of this wave 4, for us to turn to the downside sharply for wave 5, and after that, we're going to go up to correct A, B, C of wave 2, or likely going to do a WXY. So I want you to follow. So the immediate scenario, it's a scenario that sees this as an A, B, and a C for one more sharp movement to the downside. That's the first scenario. The second scenario that will be intermediate is to see a correction of this wave as an ABC for us to turn to the downside. And the last scenario is to see that we are going for a Y leg. So you must begin to entertain these 3 possible scenarios at the back of your mind, and begin to now to interrogate, where does it change? Where does it change? Where does it transit from being ABC of a 4th wave to give a 5 to become an ABC of this complete wave, ABC for more downside,
And at what point is it going to stop being an ABC of correction, but a Y leg? So we're going to look inward and see this. On this time frame for now, this possibly could be an extended flat. You must understand that. You open your mind to all this possibility that this could be an extended flat, whereby this is an A, and this is a B, and this is a C. And of course, a C wave also will be a sharp wave like this, a sharp wave. But it's going to be an impulsive wave that you are likely going to see a 1, 2, 3, 4, 5 formation in a C wave to complete it. And after that, price will begin to stylishly, collectively coming down, and before you see a big impulse that will break low again. So what we are trying to say is that if price is going to come down to take this low, then it is not an ABC of this run from here to this point that you are seeing. Probably is going to be the last wave 5 to break low, and probably to break this, and the price is going to turn to the upside. Price stylishly is telling us that it wants to break down, maybe not immediately, because it is taking the low of this, and this is a new low in the recent time after like 52 weeks. So what is price going to do? Take this as an A, B, and a C, and turn down. Of course, the limit of an extended flat will be from ear to ear, not more than 168 to the upside. So with that said, what do I mean? If you take your retracement tool, let me quickly bring out the drawing. Let me just, I want you to see. You take out your retracement tool, and this is the on the left panel. This is the fib retracement tool. You come to the point of A here, which is the height of A, your possible A. You take it to the low of the B down, and 1618 is right on the red here. So once the price violates this, if the price should violate this level, then forget it is not an A, B, C anymore. Then you begin to entertain a possible correction of the entire run as an A, B, C for us to come to the downside. Then if it's not going to be that, and that we are going to do a Y leg and it's not an ABC, the first place that you expect price to break will be this area. The primary tool here, let me use a red for it. This is weekly time frame. You can see this candle here. This is the primary tool here. As a matter of fact, we don't even expect price to break here, because in terms of retracement of the whole movement from here to down here, this is a 50, this is a 61.8, and price should not take 76 if price intends going down. From the top here of that movement of 1, 2, 3, 4, 5 to the bottom here, we have a 61.8. In fact, it's the primary tool is just sitting a little above 76. So price has no business in this vicinity if it's an ABC. And as a matter of fact, we should expect the price to turn down maybe around this area, this zone. This will be a good area for price to turn down, considering this magnitude of wave or of movement to the downside. Not to even break here, but this is the ultimate. Price coming to this area will tell you that, see, what you should expect, price coming to this area, breaking 61.8, working in this vicinity. In fact, a breach of 61.8 would clearly tell you the price is going to do a Y. And probably come here, which is an 100%. And I will tell you how I got this 100%. Now, so we are seeing those levels that price could engage to tell us that I'm not ABC structure to do 5. I'm not A, B, C structure to do 5. Or I'm not A, B, C structure of this entire run, but I'm a Y leg. So we are going to see all of that. Now, I've shown you areas or levels that price may engage to like an interswitch or interchange between ABC of a 5 to the downside or ABC of the entire run or a Y leg. So now, how do you plan trade? What you should be looking for now is not to look for a dollar strength to the upside. What you should be looking for, at least on a short note, is to look for the weakness of dollar again. That is what you should look for. Maybe we might get a small correction, a break to the upside, maybe around this area without breaking 103, 150 level. We might see a correction and get a sell to the downside. Let's see that level again. If you coincide, yeah, in fact, it's as a matter of fact, we don't want to see a break of out of 102,600. A break of out of 102,600, even if it touches here, price is not going to go up here and begin to come down and break the bottom again. If the price should break and violate this level and come to this area and you see a downward movement, just know it's probably ABC of this run, entire run. Not that the price is going to take the bottom again. Price has broken this structure completely out now to tell you I'm done. That is what we can see. But again, could it be a C leg of this structure, ABC? It's still not impossible because we have not even gotten to a 50 retracement. So in planning this, what do? We first have to look at, let me try and validate the scenario that sees this as a possible Y leg. The scenario that sees this as a possible Y leg is if we are seeing this retracement at a 90. So, and that is where I'm getting worried. Because it's only on this instrument of DXY that we are probably going to, let me see, a retracement to the downside. Because we are working from A to this level, or let's say A, the point of if it's going to be a W now for us to see a Y. So we are going to see if this is a W and this is going to be an X to have a regular flat. What sort of retracement to the downside have we had so far? If you take this to the upside, we can see that at this level, it looks like a 90 on this DXY. It looks like a 90. If it's a 90, you know we can get an 100 here. But if you look at other broker, like TVC that I use most of the time, it has taken 90 to the downside. It has taken 90 to the downside. Let's look at it. It has taken 90 to the downside. From here to the upside. It has violated 90, 88, 90 is here. It has violated 90 slightly to the downside. That is where you should be more careful. You have to now begin to entertain all the scenarios that could play out. Now, if you look at euro dollar, that is an inverse of what we are dealing with. If you look at euro dollar, now euro dollar here also, what retracement to the upside from down here? This also had violated 90. This is 90 here. This is 80 here. This had violated 90. And that strongly suggests that this could be ABC of to finish 5, or that it is, we are trying to correct entire run from here to this, to the downside. That is what it's looking like. So it's now looking remote for us to go and have a Y. That is where you don't want to take it, except things are violated here, unless price gets here to violate it. That is when I begin to think, oh, this is a Y scenario. I hope you are following me. So that in itself, a 90 breached to the upside without stocking at between 90, 88, 85, 76, and we're not getting that reaction, at least to run a zigzag to break to 100 and haven't breached 90. Then you must be careful. When you are trading, you must be very careful. You don't want to take any big chances at this high level, because it will easily turn to be an A, B, C and turn to the upside. So on the euro dollar, what level do we expect that this is going to stop? So it's the same thing. A 161.8 of this entire run that you could look for, which is around this area. So a price breaching 1.0728 tells you that this is not a C leg anymore. At this level, it's not a C leg. If it breaches it, then you should just look for an A, B, C for more upside. But now we are looking for that correction to the upside. Now, I'm going to switch back to DXY. I'm just showing us different scenario and almost the same thing that is playing. And gold might just give us a little insight also to what we might be seeing. Gold might also give us a little insight. So let's go back to DXY and look at this instrument again. If this is going to build up as a Y leg to the upside, the internal configuration should suggest such. Like I said, this may be a little long. I'm going to do something here because this is also a C of a W, and this also, if it's going to be a C of a Y. I'm going to do something here for us to see what did price do here, and I'm going to take it out later. I'm going to take it out later, but I want us to see. Now, from here, take it from here. I just want to highlight that now to this point. So we're going to go and look at that and see the internal structure. That's around July 10th of July 2023. So let's go to 10th of July 2023. That's 10th of July 2023. So that is it. So let's go to there. So it has marked it. So if I go on 4-hour time frame, so tick 4-hour time frame, 4-hour time frame. So let's now come to this area of go to. So we go to that date. Now this is the date. How did this one build up? How did this one build up? So we're going to study that. You will see that this built up or builded itself up in a fashion that you can see a 1, 2, 3, 4, 5, because the first push was here. After this 4 and a 5 of the last wave, even this last wave came down as a 1, 2, then a 3, a 4, a 5. So this one building up, we can see This is the first move, and this is the first correction. So this fell at about 50 retracement to the downside. Then we now began to see the inside of wave 3 to the upside. So this correction and a bigger correction. Even you can even almost tell, because if you want to look at this from this blue to the top of this red here, it gave us a 50. So even given a 50, you could have said that, oh, probably this is a 1 and this is a 2. It's still the same thing. It could be a 1 here, a 2 here, or in a microstructure, a 1 here and a 2 here. So all you want to do is to connect this two structure from the low here to this point. So to this point, we are seeing a little divergence here because of this bigger correction here, and which may suggest that probably we were working with 3 structure. Because if you take it up without breaking that, this is it's still following it, because if you are people that use because you can see everything is still working around, not much deviation around this line. Everything is still working crisscross around the line that came from here. This trend support. So it's still part of the wave. So all you could do is to correct it around this area or around this area, because it's still working, wrapping around it, because of the divergence that you will see on wave 3. So, and if you had come here, it's still working around it till it got to this point. You can see it's wrapping around it, so it's not a clear, it's not out. So that means that now leads us to push our trend support to this point for us to see a break because of the divergence of wave 3, the 4 of 3. So now getting it clear, we see from here to this point, and after we now finish the structure for us to come to the downside. Then after there's a clear break. Either two before, everything was just wrapping around this support. So that still tells you you are not done. When you see wave wrapping around out, below, above, is not so until you see this clearly that the thing is not even coming to wrap around and it's a complete shift. So that's what we are seeing here. So, but what I'm trying to say is that we can still take this as a wave 1 and a wave 2, which is a 50, and price began to go up, around this area. Probably we began to see what, probably wave 3 continue to build up until we got here for a 4, and this to be a 5 of 3 here. This may be a 4 of a 3, and this one went up as a 5 of 3, and to give a big 4 here. And the last impulse, because the last impulse will always look like this, like a clear 5 goes to the upside. On this time frame, 4 hour is a clear impulse. You can see a clear impulse without, so that's the way you might not even see the internal structure on 4 hour time frame, except you go to the lower time frame. Then we began to see this move. Now, this move, once we finish that, this move, it's a corrective wave to give us this as a possible change of structure of probably a 1, an A, B, C structure of a wave 2 in this regard. Then the price began to turn down. So we can see the way it formed here. The A, the 1 structure, after ending this structure here, 1, A, B, and a C, and price began to turn down to give us clearly that we are going down. So we're supposed to see something like that in this area. Now, if I now go back to the higher time frame now, the weekly time frame, we need to understand this. The weekly time frame then let us zoom in on that weekly time frame. So coming to the weekly time frame, we want to see what is developing here. We can see a break of structure that may still put this as A, B, C to the downside. So let's look at the 4-hour time frame. The 4-hour time frame here, like we just checked with the first one. The 4-hour time frame is a suspect. Is a suspect. You can see with this magnitude of movement to the upside, I'm not able to count the internal structure of a 1, 2, 3, 4, 5. We have not even had a big correction. We have not had a big correction because I expect this to. So when you see wave turning to the upside like this, then what should be coming to your mind that the scenario that we talked about may play out to see this move here as an A, B, C of the first wave, and this as a B wave, and this as a C wave. And we'll not be surprised if that turns out to be, because I can't see this going up in a 5-wave structure that I will see. Let me look at the internal architecture to see, am I seeing it as a correction here, like a motive wave correction that will go up and build up until we get to the Y. Maybe it will go up as an A, the way it has gone up. You can go up as an A structure, come down as a B structure, take a C structure that will now give me a 5 clear wave and begin to come down. Or that we may just from here probably have a small correction to the downside, the last wave, and you begin to come down. So what I will expect you to do now, because we are looking for a sell, once you get the structure, let this correct. This is going to correct the last wave. Our price does not turn down from this sharp. It doesn't occur like that. You might not see that. Price does not just turn to the downside from here and begin to go down the way it has closed, or the way it looks like it's going to close on the weekly time frame. So we'll expect the last correction, probably a movement to the upside again, probably without breaking this level. Without breaking this level of 103, 138, without breaking that level, we might now begin to see a sell. So if you see a sell, if price is going to come down, but if price should take like of this particular 4-hour candle, if price should walk below 76 retracement, or the price should, let's show us. These are practicals that we are doing now on the DXY. You can see this level here of 177.82. So this is a support. If price should break this support like the way it's coming down, then you can now look for a retracement to sell. So if we now look at that, what I expect price to do is to give me a correction, something like this. Here, give me a correction, one more push to the upside, then we look for a sell, for a drop. And when that drop is coming, we are going to look at the nature of the drop. It could be a more complex correction of an A, B, C to the downside. If that happens, then it will turn this to an impulse of an A correction, more complex than A, B, C of B in the middle, that we expect an A, B, C of B in the middle, and the last C might just go up. And we want to see if this one is going to turn into, at least we should be expecting that this may be giving us at least a 50 retracement, at least a 50 retracement. We're going to look at that correction. So for now, you don't want to go up, you want to look for that correction and sell. Then when you are doing that, you want to begin to guide your stop loss, because price may turn. So if you see a buy setup around this area, then you go for it. Now, how do we now plan that, looking at support and resistance on the larger time frame? If we turn to the weekly candle again, I'm showing us a whole lot of stuff now. Now, this is a momentum candle, an engulfing candle that is breaking here. So we expect that if I'm going to take another buy here, I should expect that price is going to walk up down here to break this support. That's the first support that price will break. Looking at the price action, even if you don't know anything about wave analysis, you expect that price will break this price here. Between here and here, price is going to break here as a support, and price may be testing this area where you have this close here around 104.450 area for price to lift up again. Now let's now take this and bring it down to euro dollar. Bringing this down to euro dollar, what do we expect? We are saying that I don't expect price to close above this area if indeed we want to. So I will expect something like a stop loss around this area if we are going down the more. I don't expect price to come here. If we are going down the more immediately, I don't expect price here, but I expect this price to at least get close. This close here, I expect price to break it and probably walk around this area. This candle here of a close that coincides with this doji and the close here, these are strong areas you should be looking for a sell again in case it wants to sell. But we are looking at the price action and the close of the candle to look at the likely area. So those ones that suggested the likely area that price is going to reach. But again, we are going to look at the format of the correction, which eventually will tell us this is where price is going. So with that in mind, if we switch to the daily candle, like the same way price came down here, even if we intend to come to the downside, you look at what looks like, let's say, imaginary primary two. This is an imaginary primary two here, this candle here, the head here. If you are looking for an imaginary primary, this head here is what you call imaginary. So I don't expect price to break above 1.11450. So we are looking at this area. The price may come here, or this area marks. These are the levels of resistance, a cluster of resistance around this area. I don't expect price to break here. So for now, we are looking at to buy euro dollar. So we are looking to buy euro dollar. We are looking at the daily price actions. We still think that this may just be an A, B, and a C to the downside and to turn up. But again, it can change at the level where I talked about. So I don't expect price to break this level. Like I said, we don't expect price to break 1.08700 before we turn to. In fact, as a matter of fact, if we are going to turn to the upside, we should turn between here and here to the upside without even reaching this area. And this might still be an area for an extended flat. And the way price came to the downside without a sensible correction may just make this an A, B, C off way from here, then for further upside. So we're going to look at it. So I've marked those levels where I expect price to work in this area. As the price had gone to the downside, I expect price to turn more to the downside if we indeed want to go down. Price is going to give us a price action here for another leg to the downside. And when that leg is going to the downside, we should be dealing with it as a possible A, B, C that may turn to become 1, 2, 3. That's how to engage trade. So you have not lost anything. You can sell more than 100 pips to the upside, and you can buy more than 100 pips to the upside. And if you have been buying from here, you can begin to, once you see a price action to the upside, you can begin to guide your trade and say, okay, you are going to close all that you've been buying from here around this area, you know, without losing much. Then because price may turn to the downside and do a while leg, giving you a 0 and a loss. So that's how to plan it. At the same time, looking at these, like I said, the primary two, looking at the daily time candle here, the primary two around here looks like here, which is, I put this red above it, it's around this area. If you look at the 4-hour time frame, can we see anything that looks like a primary two here? It's just flying to the downside. See the way it came down like a flash without, you can't see a 1, 2, a shallow correction. So maybe this is what you can still say, oh, this looks like, you know, from here to this point, you know, like, is it marked up to a primary two? If we go to inside of a 1-hour time frame, it's because you want to see how it even can make sense. Now, this might just be the last correction here from one more downward push before we go up. We are ready, we are almost ready to go up to correct this move as a B leg or back to the top. So this thing is not loading. I know you still be hearing my voice, so that I don't want to waste my time. We'll continue to talk until it is able to load. Too bad for network. So, but that's what to expect. And we are going to take all of that. I'm going to take all of that into, you know, other trades that we have, the Nzdusd USD and the gold. And the gold. And one more that I want to talk about also is USD JPY, which sorry for the break in transmission. I hope you are here with me. So this is what I was referring to. Yeah, we could see something like a 1 and a 2, a primary 2 here. And after that, it had been a shallow correction. So because we can't have this magnitude of movement without seeing a dip of 2, which we didn't see. We didn't see, apart from this 1 and a 2 here, which is the sub micro, we could not see a big, at least tangible 2 to come very close to the trend resistance now. So this whole move might just be a flash of impulsive C wave to break the top again, or that it might just be an A wave. So what we want to do is to look for a buy. So we are looking for a buy. It's almost there. You have broken this. If price should take more than 161.8 or a 61.8 of this candle to the upside, then know for sure that again is a buy. You look for a correction down to buy. That is how to go about it. So how do I do that? From the top of that candle, maybe from here to here, a 61.8 of that candle is around this area. So price breaking above 1 point, let's say 1.10200. If price should break 1. In fact, this support here, this resistance here at 10,100. If price should break 10,100 to the upside, then all you can do without breaking the bottom again, all you can do is to look for a retracement and begin to buy. And when we buy, we are concentrating
around this area, you know, for a possible wave to the downside. That's what we can do. That's what you can do. And if you want to be more careful, you can begin to, yeah, the manner, if it goes up impulsively, if price begins to go up impulsively, just know that that is a wave 5 to break the top. But if it goes up correctively, corrective format, like we know, is price doing something like this, goes up, come down, again up and down, do, you know, try to finish. If it goes up and begins to do some consolidation in the middle, that's a corrective format. So price may just go up, do corrective and waste time in the middle. And when it does that, at least you expect one more impulse or move to the upside. And after such move, that is when you can now expect if price is going to change direction. So at the level you see the first movement and the consolidation, following consolidation, if price should first move and you see a consolidation, price is not going to go down from that consolidation. It's going to go up again because price is just trying to gather up liquidity from that move. If this one goes up, waste time here, zigzag movement, up and down movement, price will not turn down from there. It's going to go up again. So after going up, then you'll be looking for your limit of correction to the upside of the third arm. If the first arm goes up and it gives you the middle arm as a consolidation, look for where the third arm is supposed to be and look for price action in case we want to turn down. Otherwise, you begin to guide your stop loss below the consolidation, guide your stop loss and begin to see if price is going to continue to go up. But as a matter of fact, price may turn impulsive. Turning impulsive means that the price will just be wedging sideways and be going like that without big correction. And will be going like that until it violates 618, violates 76. When you see that, it's going to break the top. So I've given us an, you know, a clue into what to expect. That's about that. The same thing applies to NZD USD. The same thing applies to NZD USD. And all those major currencies, the same thing applies to them. So DXY is giving us a lead in the coming week, but immediately in the coming week, see, everything came down like that. So this could still be an A to the downside. See the way this one came down. You see, it came down without giving you like a correction that you can see. When you see things like this kind of thing might not go down. You can see the way it came down. I can see a clear correction. It gives you a sharp wave, a B in the middle, and a C. And it was the C that probably wedged down like this. And what did we see next? We saw this move. So this could be a B, and this could be a C on the larger time frame. The same things that this one did is what we are seeing here. So to give us a small B in the middle here, a small B in the middle, you can see A, B, C as a small B with this magnitude of movement. You couldn't have suspected that it's going to do this, and price just began to go down like this. These are crazy moves. These are crazy moves that might be difficult for anybody to catch. And price now came down. So the way price came down, don't be surprised if price begins to go up. I think for NZD USD, it might be a bit clearer when you see this move as an A and a B here. So if you look at your retracement tools to look for 161.8, so from the low of that bullish candle back to the B here, a 161.8 is exactly at this red. So you should be looking for this red to be violated. If the red is violated, then you know it's a big impulse of an A. So I've shown you something here now for this particular so if this level of 0.61291 is taken to the downside, if it's violated, then forget ABC of a C leg as a extended flat to turn to the upside. You forget that.
then you are expecting an ABC of a bigger 2, which is this wave. In this complete move, then we're going to have probably an A, B, C to turn to the upside. That is what you should be expecting on NZD-USD. On NZD-USD, I'm not expecting that price is coming to take the bottom. I'm not expecting that. And because I'm not expecting that, based on the structure that we have analyzed on NZD-USD, I think this is the last bottom for now. If we are indeed going to go up more, this should be the last bottom for now on NZD-USD. So this is likely going to be an extended wave, come here without breaking this bottom, go up again. That is likely going to play out here with what I'm seeing, because this may still be play out to be A, B, C, but violating 61.8 will take it out of the equation for me and make it an ABC of the entire run here. ABC, go up and turn more down and fly up again. That is what I should be expecting. But I'm not expecting this. It's only on euro dollar that may play out to be a Y. But again, the Y is not looking like a Y because I said DXY broke 90 retracement. Euro dollar broke 90 of a retracement. I should be thinking that if this cannot be an extended flat, then it's an ABC correction for more upside that we should be expecting on all those instruments, be it NZD-USD and euro dollar. So we'll see. We are looking for a buy now, and a buy to buy and begin to guide our stop loss after formation of structure. We'll put our stop loss below structure to see if we're going to go up and break up. Like I said also, the way and manner it will correct, if it's going to turn up like this, it can go up like this in this fashion, just wobble and wobble without giving us a clear B wave, then know that that is wave 5 that is going to break up. But if it goes up in the middle and begins to correct, just know that price is going to give you another sharp way to the upside, and that may be a completion of a B wave to turn to the downside. So that is what we are expecting these scenarios to play out. So we have not missed a thing. We have not missed a thing. Now, with this, let me go to gold. Let me go to gold. So with gold, we're going to see a thing here because gold, this looks like a wave 4 that may have completed itself. And for now, we are looking to finish up a wave 5. And after that wave 5, that will come close to 2740, 2728, we may be falling down to do a bigger fall that will probably be close to 3,000 pips. What we are seeing here, we're going to look for everything that counts, because we are taught that when you see a move like this, an A, B, C, that was the first move of a running flat here, but it quickly turned to not be a running flat, but like A, and the old move here as a B wave, then for us to have a C. Or we can also look at it this way, that this one that give us an A to the downside here, the move here as a B, and the move here as a C in the primary, to give us an A, B, C in the primary. And this turned out to be an X. And after an X, we had a 5 way to the downside, 1, 2, 3, 4, 5. So at the end of the day, it's a WXY. So we can now see that this one as a regular flat to give us a complete an A, B, C, a regular flat here, becomes a W. This became an X here, and the last 5 waves became a Y. So WXY as a single correction or a double correction, double 3 to the downside. Then thereafter, we saw this impulse. And this is exactly what this kind of a wave is what I'm describing on DXY, Nzdusd USD, Euro dollar, that it may go up in the coming week, and it will just be going up to break more than 61.8 without giving a small move, a correction like this that we are seeing. So when we see this kind of a lift and this kind of a thing, this looks like a 50-50, but more of bullish sign that may take the top, break this top, and possibly break this top before coming down. So if we are going to buy now on gold, is a short buy, because the structure is getting set for that bigger correction to the downside that may go close to 3,000 pips to the downside that we've been expecting. So now this move here, it has violated the X structure here, because this is an X structure. Like I told us, I analyzed this particular one here, this correction from here to here now. So we said this is the first sharp movement, that the B wave in the middle, and the last 5 waves here. As a W, we now add a X that didn't break here, the X as a straight line, then without the last 5 waves of a Y. So, and a Y wave will always behave like this. So if what we saw on DXY, that big move, is a Y move, then it's going to have a deep correction of it. So the magnitude and the manner of that wave that we are doing in this coming week matters a lot. The way it's going to buy matters a lot. So this is an X. See that this wave broke this X. Because it broke this S, it's a big deal. Because if it had were to correct more to the downside, I don't expect that it's going to take up this X. So that's the first clue. But having said that, the B wave here will be another clue. So let this take up the B wave here, which is the primary B. So this is an X. So we need to take up this primary B. I'm giving us an insight on how to quickly see what wave is trying to do and where price is going. So we need to break above 26.77. So one price take above 76.77, you must now know that's the last bullish move for us to have a deep fall correction. So now here, price make this move, and you began to see some other corrections. So what is this correction to me? What do I see here? I see that this move, and what we are seeing is a correction of this move. So this may be a 2 of the last wave, the last 5 wave. This may be a 1 and a 2. And in this 2 is looking like, okay, it's going to give us probably a double 3, or it might just be a flat correction. So where is the correction? This is the first move to the downside here. This correction to the downside here is the first move as a 1, 2, 3. That's the first move. This one came down as the first move. And this one looks like the B part in the middle and a C here. So at the end of the day, it's like an A, B, and a C. That is what I'm saying. Now, the last move looks like we have done probably an X here, and we are seeing the last Y move, because it can become, like this one can become a W, an X here, and these might just be 1, 2, 3, 4, 5 wave here, and that this one is going up. So we don't need to take the low of this. So once price begin to go up and break up here, then we are not taking this low. So if price should take the low of this area again, if price should come to take 26.30, then forget it, price is going bearish. But with what I can see here, I can see that price is going to begin to crawl up and violate this primary B here and go up. and anything around 2700, 2720 something, 2740, you are guiding your stop loss because price is going to break down from there. So with that bullish sign that I can see, maybe about 70 to 30% or 65 to 35% of a bearish, 35% bearish on gold, 65 on bullish on gold. We may be seeing all these other ones, euro dollar, taking the top one more time and going down. But of course, what is going to speak to us is the way and manner this move of correction is going to be. Is that going to be impulsive, like this is impulsive, or it's going to be corrective? And we're going to pay attention to it. Now, let's go to US dollar USD JPY. USD JPY. These are levels that you don't want to put in big lot sizes, except you are going to burn yourself. We are seeing what could play out, but now we need correction. So we need that corrective format, either to go long again on euro dollar and to go bearish again on DXY. So we need that correction, and we need that price to talk to us to know what to do next. On USD JPY, and this is one that is going to give us a clear sell opportunity, which I don't want you to miss. See, these are examples of where and what price may do. We are taught that these are giving us a move here for us to see this as a possible X. And the first sharp movement here, we expect that this one will not go beyond 78 or 76 to turn down to give a WXY before we move up. And this move, and that is why any sharp movement that you see that is big, it can be erased. It is not about engulfing candle, or it's not about price, going, or that's, this is like a 4-hour candle. So all that you saw that the NFP did to give us a very big candle, the way this one came down without showing off the inside of 1, 2, 3, 4, 5, that's the same way price may go up and turn up, when the market opens. But we're going to pay attention. Where the market is now, don't look for dollar strength. Look for dollar weakness. It may correct, still give you like a small strength to the downside, but we want to buy against the dollar. And when we are buying against the dollar, you want to guide yourself. You want to pay attention to the structure that you are seeing. That is what we want to do in the coming week. So now, this day up top about has been taken. The X that you think that this is now out of the way. So what exactly are we seeing now? We are seeing that we are now seeing this as a WXY to the upside. And after this big move, that's exactly the way USD also came down, that you hardly can count 1, 2, 3, 4, 5. Can you see the way it came down? That was what you saw also on DXY and euro dollar and Nzdusd USD. So it could be anything. So we are going to wait. This level, which is a B, should not be taken, because when you see this move, this one came down here, gave us like a B structure and the last C structure here. And after what looked like a last C structure, then the B wave in the middle started. So for me, this is the B wave in the middle, because this has completed an A wave. After all the movement that we've been seeing, this is an A wave, then this is B wave in the middle. This B wave in the middle now, we now begin to see what looks like a W here, an ABC pattern here of an X that broke down. And we're going to see, you may call it an A, B, and a C to the upside. But what we are seeing a WXY, a W, an X here, and a Y. So for this to be an Y, here we are saying that if this is A, the extension of this downside compared to A is 1, 2, 3. So if it's 1, 2, 3, we are expecting an extension of 1, 2, 3 to the upside for an extended flat. So we are looking for an extended flat to the upside as an A, B, and it's going to take this top, give us an extended flat of a 1, 2, 3. So with that said, let me bring out the drawing. This area is where I expect price to get to for us to turn bearish. And again, what lesson can we draw from here when we are looking at what may play out or not on DXY? I expect that price will correct, come to this area, to tag this area as a C or WXY or ABC, tag this area, pick us here around this area without breaking this point and without breaking this B area here. So pick us around this area, 151,700 area. It's a very good area, a key area to sell. And if you get a sell, then we should be looking for an equal leg from here down to the downside. And that should give us at least, if you're able to come in, it should give us over 2,000 pips. So we are looking at over 2,000 pips if we get a clear sell around this area. So you can only wait and get your sell and as a extended flat around this area to turn the downside. So we'll see how that plays out in the coming week. So we need about close to 200 pips to the upside to finish this wave. It's going to correct until it finishes itself around this area. So target this area to sell. So if that happens, and dollar will begin to grow cold again and begin to fall here, with that fall in the dollar against the yen, reflect on all other majors. But we'll see. So with that, I've come to the end of today's update. It's a long one. Look at it. I interrogate different scenarios that could play out. We know how to now, manage this trade. God bless you.